All right, get ready, because this deep dive is a wild one. We're talking insolvency, we're talking taxes, and we're talking about what happens when those two worlds collide.
Yeah. It's a recipe for, let's just say, a lot of head scratching. And judging by the stack of legal analyses, YouTube videos, even tax forms you sent us, it seems like you're feeling that too.
You got that right. Our listener is clearly ready to unravel this whole insolvency and tax law thing, especially with that rainbow paper judgment everyone's been buzzing about.
Oh yeah, the rainbow paper case definitely threw a wrench into things.
Yeah.
But before we even go there, maybe we should take a step back for a sec.
Back to basics. I like it. I mean, we're talking about two massive, complex systems here, each with its own set of rules and goals. It's like they're in a constant tug of war, right?
Totally. You've got insolvency law, which basically swoops in when a company's going belly up, tries to bring some order to the chaos, figure out who gets paid what from whatever scraps are left.
And then on the flip side, you have the tax man who wants to make sure the government gets its cut no matter what.
Exactly. And that's where things get really interesting because, the government needs that money to fund all sorts of essential stuff.
Yeah.
Roads, schools, the whole shebang.
It's like these two systems are trying to share the same slice of pie, but the pie keeps shrinking. And from the looks of it, the rainbow paper judgment is a prime example of how this whole thing can go sideways.
Oh, for sure. That case really shook things up. In a nutshell, the Indian Supreme Court basically said, hey, certain tax debts, those are automatically backed by a company's assets.
Hold on, so even if other creditors are first in line, the tax man can waltz in and say, sorry, mine first. Talk about a curveball.
You said it. That's why everyone's freaking out. I mean, imagine you're a lender who played by the rules, filed all the right paperwork, and suddenly, bam, this hitting tax lane pops up out of nowhere.
Talk about a nightmare scenario, especially if you're a small business owner already struggling to stay afloat.
Yeah, it's a tough situation, and it's created a lot of debate about fairness and how this judgment might impact lending practices down the line, but that's just the tip of the iceberg. You also sent some info about some recent changes to the Income Tax Act, right?
Right, and those seem to add a whole other layer of complexity to this whole thing.
For sure. Section 28, subsection 4 in particular, has a lot of people worried. It basically expands what's considered taxable income, and some experts are concerned about how that might affect businesses, especially during insolvency.
Can you give us the rundown on that?
Well, in the past, it was mainly about actual cash flow, money coming in. But this amendment broadens it to include any benefit a business gets, even if it's not straight up cash.
Okay, so how does that play out in a real-world scenario?
So let's say a company's drowning in debt.
Yeah.
Right? And as part of an insolvency resolution, a bank agrees to forgive, write off a chunk of that debt. Sounds like a good thing. Yeah.
Right, like a lifeline.
Exactly. But under this new amendment, there's a chance that waived loan amount, well, it could be considered taxable income.
So even though the company is getting a break, they might still get hit with a hefty tax bill. Talk about adding insult to injury.
That's the worry. And that's just one example. We haven't even touched on avoidance transactions, which is a whole other can of worms.
Ah, right. Those pre-insolvency maneuvers companies pull to try and protect their assets from creditors.
Exactly. And the IBC, the Insolvency and Bankruptcy Code, it's got provisions to claw those assets back, make sure everyone gets a fair shake. But it's complicated stuff.
Sounds like navigating this whole insolvency and tax landscape is like walking a tightrope. One wrong step and splat.
That's one way to put it. And that's why we're here, to break down these complex issues and hopefully give you a better understanding of what you're dealing with.
Yeah.
Navigating this whole thing can feel like trying to defuse a bomb sometimes.
I hear you. And speaking of bombs, that rainbow paper judgment really blew things up.
Definitely caused a stir. And I get it. You're a creditor, you've played by the rules, filed on time, and suddenly the government swoops in with this hidden claim.
Like, hold up, I was here first.
Exactly. It's like a secret weapon that makes lenders think twice before dealing with certain businesses, especially in a risky situation.
Especially if you're a smaller company.
Yeah.
You're already up against it trying to secure funding, and now there's this added uncertainty.
Right, because lenders are thinking, what if the rug gets pulled out from under me? What if this hidden tax debt pops up? And suddenly I'm at the back of the line.
Makes sense. It's like an extra layer of risk assessment they have to factor in.
Exactly. And some argue that this whole thing, the rainbow paper situation, might actually discourage investment, hurt economic growth.
Because lenders get spooked, they see the government potentially muscling in and they think, nah, too risky.
Exactly. And it raises a big question. The government needs its taxes, right? to fund essential services.
Right, road schools, the whole 9 yards.
But at the same time, they want to encourage a healthy business environment. And some argue that this judgment might actually work against that.
It's a tough needle to thread, for sure.
No doubt. And this whole rainbow paper thing, it highlights a bigger issue. The challenges that resolution professionals face every day.
Those are the folks tasked with untangling the mess when a company goes under.
Right, exactly. They're trying to figure out if the ship can be saved or if it's time to cut bait. But the whole time, they've got this tax man looming over their shoulder.
And it's not just about calculating how much is owed, right? You said even tiny details on those forms can have huge consequences.
Oh, absolutely. It can be a minefield. One misplaced digit and boom, you're looking at a whole different outcome. Take the LML Limited case, for example.
LML Limited, what happened there?
So this case revolved around capital gains tax during liquidation. Sounds straightforward enough, right?
You sell an asset for more than you paid for it, you pay taxes on the profit. Pretty standard stuff.
Right. But here's the catch. The courts had to decide if this capital gains tax was just another company expense, or if it was more like a debt owed to an operational creditor.
And why does that matter?
Because it determines who gets paid back first during liquidation. So even something as seemingly basic as how you classify a tax liability can spark a whole legal battle.
Wow. So we've got this rainbow paper situation, potentially spooking lenders. And now we're seeing how even classifying taxes during liquidation can be a headache.
It's all connected. And it highlights why understanding both tax law and insolvency law is so crucial, especially if you're in the thick of it.
And let's not forget those recent changes to the Income Tax Act you mentioned earlier. Those seem to complicate things even further.
Absolutely. We touched on Section 28, subsection 4 earlier. Remember how it expands the definition of taxable income?
Right. It's not just about cash anymore. It's about any benefit a company receives.
And one of the big worries is how this might impact loan waivers during insolvency.
Loan waivers. Those are supposed to be a good thing, right? A way to help struggling businesses get back on their feet.
Exactly. Let's say a bank waives a big chunk of a company's debt, gives them some breathing room during insolvency. That's a positive step, right?
Like lifeline.
But with this new amendment, there's a chance that waived amount could be considered taxable income.
Wait, so even though they're getting a break, they might end up owing taxes on that break.
That's the fear. And that's why understanding the nitty-gritty of these tax laws is so important. What seems like a minor technicality can have a huge impact.
It's like a curveball you never saw coming. And we haven't even talked about those avoidance transactions companies use to try and shield their assets.
Right. Those pre-insolvency maneuvers. They add a whole other layer of complexity to this whole thing.
So on top of everything else, you've got companies trying to play hide and seek with their assets.
And that's where the IBC comes in with its clawback provisions. It's basically a way to say, nice try, but we're taking those assets back.
It's like they're trying to slip out the back door with the good silverware before the party's even over.
And sometimes they get away with it. But the IBC, those clawback provisions, it's like having a good bouncer at that back door. They're there to say, nope, not so fast. Everything gets accounted for.
So it's not just about catching those companies red-handed. It's about having a system in place that makes it harder for them to even try these shenanigans in the first place.
Exactly. And that's where things are getting really interesting. Technology is changing the game. We're talking about using data analytics, even artificial intelligence, to track those money trails, follow the breadcrumbs.
So it's like giving investigators X-ray vision, allowing them to see through those complex financial transactions and uncover hidden assets.
Precisely. It's getting harder and harder to hide in the shadows. And it's not just about catching those bad actors after the fact either, this technology. It's helping authorities identify potential red flags in real time.
So it's about prevention as much as it is about enforcement. Makes sense.
Exactly. And ultimately, that's what we're aiming for. A system that's transparent, accountable, where the rules are clear, and everyone plays fair.
A level playing field where creditors have a fighting chance of getting their due and the government gets the resources it needs. Easier said than done, right?
You got it. It's a constant balancing act. But hey, that's why we love talking about this stuff.
That's for sure. We've covered a lot of ground in this deep dive. The Rainbow Paper judgment, those Income Tax Act amendments, the LML Limited case, we even touched on avoidance transactions, the whole 9 yards.
It's a lot to wrap your head around, but hopefully we've given you a good starting point, a foundation to build on.
Exactly. We've given you the map, but now it's up to you to explore the territory. Stay informed, seek expert guidance when you need it, and most importantly, never be afraid to ask questions.
Couldn't have said it better myself.
It's been a pleasure diving into this with you. Until next time, Happy exploring.